Hello everyone, welcome to the market opening bell on Wednesday, February 11th, your 10-minute guide to the stock market. Hong Kong stocks opened higher on Tuesday, but later narrowed their gains. The Hang Seng Index opened up 175 points, then extended gains to as much as 370 points, reaching an intraday high of 27,397 points. It closed up 155 points or 0.6% at 27,183 points. The Hang Seng China Enterprises Index rose 74 points or 0.9% to close at 9,242 points, while the Hang Seng Tech Index climbed 33 points or 0.6% to 5,451 points. Total market turnover for the day reached $234 billion. Southbound funds drew Stock Connect at total trading volume of $95.717 billion, with net inflows of $84.66 million. Net inflows were seen in Meituan at 546 million, SMIC at 376 million, and YOFC at 287 million. Net outflows occurred in Tencent at $1.402 billion, PopMart at 235 million, and Zhaojin Mining at 221 million. Technically, the Hang Seng Index filled the downward gap from last Monday between 27,384 and 27,100 points, but closed near the opening level, forming a hanging man or dying cross pattern. This suggests it may test support at the 10-day moving average around 27,130 points. If the 10-day line is breached, the next support level is the 20-day moving average at 26,948 points. Mainland China's three major indexes traded sideways in a narrow range during the morning session. The Shanghai Composite Index closed up 5 points or 0.1% at 4,128 points. The Shenzhen Component Index rose 2 points or 0.2% to 14,210 points. The Chinex Index fell 12 points or 0.4% to 3,320 points. Combined turnover on the Shanghai and Shenzhen exchanges total 2.1022 trillion yuan. The renminbi central parity rate against the US dollar was set 65 pips higher at 6.9458 per US dollar. Reports indicate that Baidu has internally launched a project codenamed O-Plan, with insiders revealing it's related to the Baidu app. Previous reports noted that the XunCe Yiban assistant under Baidu app has surpassed 200 million monthly active users and was among the earliest to enter the Lunar New Year AI competition with a 500 million yuan red packet campaign. While many industry players focused on standalone apps for Lunar New Year promotions, Baidu's O-Plan is still centered on the Baidu app, highlights it as a key AI entry point for the company. Meanwhile, Baidu is accelerating its global expansion. Its Baidu Search has launched global search enabling deep indexing and understanding of tens of billions of high-quality global contents seamlessly integrated into XunCe Yiban. On the same day, Baidu Baike released its international version, Baidu Wiki, initially supporting 5 major languages: English, French, Spanish, Russian, and Japanese, marking its transition from a Chinese knowledge platform to a global knowledge service provider. The mainland big data service provider XunCe technology, often called the Chinese version of Palantir, surged nearly 18% on Tuesday after jumping 14.5% on Monday. XunCe technology specializes in real-time data infrastructure and analytics solutions, building a millisecond-level AI data agent platform that drives real-time data analysis and efficient decision-making across industries such as finance, urban operations, energy, high-end manufacturing, healthcare, satellites, robotics, telecommunications, and consumer markets in the AI era. Zhaojin Mining fell 5.8%. Mainland media reported that a cage fall accident occurred in the vertical shaft at the Shanzhuang mining section of the Canzhuang at the Shangzhuang mining section of the Canzhuang gold mine in Zhaoyuan City, Shandong Province, under Zhaojin, resulting in 7 deaths, and the company is suspected of concealing the incident is under investigation. From 2020 to 2024, the Canzhuang gold mine had an average annual gold output of about 1 ton, an average annual profit of around 60 million yuan, representing a small proportion of the group's historical data, so the impact on performance is limited. Market rumors suggest that Chow Tai Fook will adjust prices for gold products at its mainland stores after the Lunar New Year, with the adjustment potentially starting formally in mid-March. The price increases will mainly target fixed-price products, with expected rises of 15% to 30%. Chow Tai Fook previously implemented 3 rounds of gold product price hikes last year in March, October and December, with the late October adjustment targeting fixed-price gold products, where most increases range from 12% to 18%. If this round proceeds smoothly, it would mark the company's 4th price adjustment in nearly a year. SMIC reported 4th quarter 2025 sales revenue of $2.4887 billion, up from $2.2073 billion in the same period last year, with sequential growth of 4.5%, exceeding the company's original guidance growth of 2% and market expectations. Gross profit was $478.1 million compared to $499 million in the prior year period. Gross margin stood at 19.2%, within the company's original guidance of 18 to 20%. Capacity utilization remained high at 95.7%. Net profit was $173 million, up about 61% year-on-year. For the full year 2025, unaudited sales revenue reached $9.3268 billion compared to $8.0299 billion in 2024. Profit attributable to owners of the company was $685.1 million, up 39.1%, mainly due to higher wafer shipments, improved capacity utilization, and changes in product mix. First quarter 2026 guidance is sales revenue expected to be flat sequentially compared to the 4th quarter of 2025. Gross margin projected between 18% and 20% for the full year 2026, assuming no major changes in the external environment. The company expects revenue growth to exceed the industry average. Capital expenditure is anticipated to remain roughly flat with 2025, which is about $8.1 billion to ensure stable capacity expansion. Management noted that the company faces opportunities from industry chain onshoring, but most also address challenges from memory cycle fluctuations. China Literature Group issued a profit warning, expecting to record an IFRS loss of 750 million to 850 million yuan for 2025, compared to an IFRS loss of 209 million in the previous year. This is primarily due to an estimated goodwill impairment of about 1.8 billion yuan from the 2018 acquisition of New Classics Media. After this impairment, New Classic Media's goodwill has been fully written down. Excluding the goodwill impairment, the company expects non-IFRS profit of 800 million yuan to 900 million yuan for 2025, down from 1.142 billion yuan the previous year, mainly due to reduced profits from New Classics Media. CEO and President Hou Xiaonan stated that the company will focus on 3 core strategic directions this year: evergreen content, IP plus AI, and globalization. Last year, while consolidating its core online literature base, China Literature achieved breakthroughs in IP visualization, commercialization, globalization, and AI across multiple fronts. Emerging formats such as short dramas, animated dramas, and derivatives achieved scaled growth, forming a second growth curve for the IP ecosystem and propelling the company into a new phase of quality improvement and efficiency enhancement. Mainland Intelligent Equipment Company Lead Intelligent Equipment, stock code 470, will begin trading today. Yesterday in the grain market on Philip Mart, it closed at $46.66, up 1.9% or $0.86 from the listing price. Excluding fees with a bought lot of 100 shares, this represents a paper profit of $86 per lot. According to Deal Logic and Bloomberg data, new listings with fundraising of $100 million or more have shown strong post-listing performance, with average first-day gains of 23.8% and average one-month gains of 30.7%, the best in nearly 20 years. As of the end of January 2026, more than 400 companies are in the queue for listing, spanning diverse sectors including healthcare, raw materials, TMT, and industrials. This includes over 50 companies supplying under Chapters 18A, 18C, and 8A of the listing rules, featuring breakthroughs in areas such as cancer treatment, intelligent robotics, and automated logistics. U.S. December retail sales unexpectedly came in flat, raising investor concerns about cooling consumer momentum. Major U.S. indexes show mixed performance, with the VIX Fear Index rising 0.43 points or 2.5% to 17.79. The Dow Jones rose for the third straight day to new intraday and closing highs, peaking at 50,512 points intraday, up 376 points before closing up 52 points at 50,188 points. The S&P 500 fell 0.3% to 6,941 points, and the Nasdaq dropped 0.6% to 23,102 points. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, rose 67 points or 0.9% to 7,885 points. Disney and Home Depot both rose more than 2%, leading gains among Dow 30 components. Alphabet shares fell 1.8%. Market reports indicate that due to strong demand, Alphabet increases bond issuance again, raising the total size of sterling and Swiss franc bonds from $9.4 billion to over $11 billion, plus $20 billion issued in the U.S. market, bringing the total issuance to nearly $32 billion. Oracle rose 2.1% after completing a $25 billion financing last week. Market sources say Meta is also preparing a large-scale bond issuance, with its share down 1%. Tesla rose 1.9%, the only gainer among the Magnificent Seven. Memory stocks declined, with Micron down 2.7% and SanDisk falling 7.2%. Weak U.S. retail data pressured retailers, with Costco and Walmart both falling more than 2% and 1% respectively. Coca-Cola fell 1.85% after fourth quarter revenue missed expectations, with quarterly guidance also below market forecast. Spotify surged 14.8% after reporting fourth quarter 2025 revenue of €4.53 billion, up 7% year-on-year, and earnings per share of €4.43, up 1.5 times year-on-year, beating expectations. On the economic data front, U.S. December retail sales were flat month-on-month versus up 0.6% in November. Excluding auto dealers and gas stations, retail sales were also flat. U.S. December import price index rose 0.1% month-on-month, in line with expectations. Export price index rose 0.3% above the expected 0.1%. ADP reported that private employers added 6,500 jobs in the week ending January 24th. Our stock pick today is Ascletis Pharma. Stock code 1672. Ascletis Pharma recently completed a placement of 69.256 million new shares at 12.18 Hong Kong dollars per share in early this month, raising net proceeds of approximately 835 million Hong Kong dollars or 107 million US dollars. Singapore's sovereign wealth fund GIC invested 781 million Hong Kong dollars to increase its stake, raising its shareholding to 6.42%, reflecting the fund's positive outlook on the company's prospects. The placed shares represent approximately 6.98% of the company's existing issued share capital. The company intends to allocate 90% of the funds to preparations, groundwork, and initiation of the global phase 3 clinical trial for ASC30, its small molecule oral GLP-1 receptor agonist for the treatment of obesity, with the remaining approximately 10% proposed for working capital and other general corporate purposes. The company's flagship product, the oral small molecule GLP-1 receptor agonist ASC30 for obesity treatment, achieved positive top-line results in its 13-week phase 2 study. The study was conducted at multiple centers in the United States and enrolled 125 participants with obesity or overweight accompanied by at least one weight-related comorbidity. It evaluated 3 doses of ASC30 oral tablets, 20 mg, 40 mg, and 60 mg. At week 13, all 3 doses of ASC30 met the primary endpoint compared to placebo, demonstrating statistically significant and clinically meaningful weight loss. On the primary endpoint, the 20 mg, 40 mg, and 60 mg doses achieved weight reductions of 5.4%, 7%, and 7.7% respectively. In addition to achieving statistically significant and clinically meaningful weight loss, ASC30 also met secondary and exploratory endpoints. Across all dose groups, ASC30 reduced multiple known cardiovascular risk markers, including total cholesterol, low-density lipoprotein, cholesterol, triglycerides, as well as systolic and diastolic blood pressure. At steady state, ASC30 plasma concentrations increase with dose. In this phase 2 study of ASC30, all gastrointestinal adverse events were grade 1, which is mild, or grade 2, which is moderate, with no grade 3, which is severe or higher gastrointestinal ASC30 with no or higher gastrointestinal AEs. These results indicate that ASC30 has best-in-class potential in both weight loss efficacy and gastrointestinal tolerability. The company plans to submit these data to the U.S. Food and Drug Administration in the first quarter of 2026 and request an end-of-phase 2 meeting. Additionally, the new drug application for the company's first-in-class once-daily oral small molecule fatty acid synthase FASN inhibitor difenistat ASC40 for the treatment of moderate to severe axin vulgaris has been accepted by China's National Medical Products Administration (NMPA), bringing it one step closer to commercialization. Suggested buy price $16.5 Hong Kong dollars, target price $18.1, stop loss $15.5. I do not hold the above stock.